Gene, you have remained throughout a lot of this a bull, and yet here we are, and there's questions about whether the multiples on big tech can remain, persist, or are going to continue to go down if, in fact, you think the Fed is going to continue to move against the market. What do you think at this point?
Andrew, I think you have to look at the near term versus the long term. The near term, it is still a tough market, I think, even for big tech across the board in tech. We saw that with a reaction to big tech yesterday, down 6.8%. The NASDAQ was down 5.2%. That, I think, speaks to the near-term risk. Typically, these big tech companies fare better when there is some concern as an area of safety, but I think investors are acknowledging that as rates continue to go up, it's basically going to be almost impossible for these stocks, whether they're big or small tech stocks, to work. Which begs the question.
If that's just a falling knife, is it like get out of the way then, or what?
Well, that is the next piece here. I see that as this bottom forming. This is something that I've believed for a long time, from summer through fall. We're going to be forming the bottom. But there are three important numbers that I think outweigh the negative aspect around rates, and ultimately are why I remain positive on tech and some of the big tech more specifically. And the three numbers are 36 and 10. 36 and 10. 30% was the growth for the top 5 big tech companies last year, revenue growth. This year, it's going to be 6%. The current street estimates are for 8% growth. So I think they come down for the back half of the year. But next year, we should see a step up in growth. And we know that rates are important. We also know that anticipation of accelerating growth is a formula for tech stocks to go up. And so despite all the vortex that we're in, despite a belief that I think they are going lower here, if you're going to say put a stake in the ground, where are they going to be 6 months from now? I think they'll be higher. And if you say 12 months from now, I think these stocks will be measurably higher.
Okay, but Gene, we've got folks out there saying a recession is looming. If a recession is looming, that would actually hit earnings. You don't think that would also hit the stock price? Or you think it's already baked in?
I think a lot of it's baked in. I think when the actual recession hits, it's hitting right now. I think a lot of that gets baked in, and ultimately,
but it's not hitting right now. We're not in a recession yet, for real. I mean, unless you think we are, depending on how you measure it, right?
Right. I was thinking that from a market perspective over there, but to your point, is the definition, have we crossed that threshold? No. So what happens when a recession hits? And I think the answer is going to come down. I talked about those three numbers. The answer is going to come down to that 10% number for next year. That 10%, that's a revenue growth number for the 5 big tech. If that number is higher than where it is for 2022 for this year, again, I think the numbers are coming down for the back half of the year. September, there's going to be misses. It's going to be a mess on the September quarter and the December guide. But if ultimately, to answer your question, is that if that number for next year, that revenue growth and earnings is higher than it is for 2022, I think these stocks go higher, even in the face of a recession.